Welcome back. It's time now to take a look at the top business stories. Most GCC states face increasing gas shortages. Emirates NBD launches region's first gold investment product. And we find out how Middle East companies are taking to management systems. Asian markets close higher today, with gains at the Nikkei following a positive revision to Japan's GDP data. There were mixed results across the GCC markets, with a similar trend at the UAE bourses. The DFM fell 0.5% to close below the 1,700 mark. Arab tech construction was down 2%, while MR properties fell 1%. Emirates NBD lost 1.75%. Shares at Aramex climbed 4.5% as the company announced a series of acquisitions and partnerships in Turkey, Malaysia, Bangladesh and Vietnam. 96 million shares were traded, valued at 146 million dirhams. The ADX gained 0.25% to close at 2,761 points. Aldar Properties continues to climb. The company's shares were up 2%. Etisalat was also up 0.5%. Dana Gas fell 1.5%, while TAQA dropped 0.75%. 78 million shares were traded, valued at 151 million dirhams. For a detailed discussion of how the local markets fared this week, we're now joined by financial analyst Bruce Powers. Welcome to the show again, Bruce.
Thank you. Good to be here.
Now, the big news this week was that Axiom Telecom actually dropped and cancelled its IPO. Not very good news for the markets there.
Well, the success of this IPO was seen as an indication of the strength of the recovery. It would have been the first IPO in almost 2 years in the UAE and expected to boost investor confidence.
Right.
Now we have a number of companies in the IPO pipeline that are probably likely to postpone. It also, very importantly, puts at risk the ability of Dubai government companies, controlled companies, to use that avenue in order to, as part of the refinancing strategy.
Right.
40% of Axiom is owned by a Dubai holding subsidiary. Now, I don't think there'll be much negative impact necessarily on the market, but what it does do is take away the potential positive impact.
Right, okay. But the good news for the construction industry in Qatar off the back of the 2022 FIFA World Cup bid.
Absolutely. There's an estimated $57 billion to be spent in Qatar over the next decade.
It's incredible, isn't it?
On related infrastructure. So this will certainly be good for construction companies in the region. Since the announcement, Drake and Skull rallied to a 12-month high on expectations that it will win some Qatar contracts. And also Arab Tech has rallied very strongly. Both are now in a very short-term profit-taking. Now, if you look at the Qatar index, it has now hit a 26-month high, and it has significantly outperformed all the other GCC markets.
Wow.
It's up over 27%, while the next best performer is Oman, up a little over 12%. Now, most of this difference is due to the performance in December, since prior to the announcement where their expectations were there, and then once the announcement was made that they did win. So big performance in Qatar, and probably further follow-through as things settle down a little bit as well.
Incredible stuff. Thanks so much for your insights. See you next week.
Thank you.
Now, GCC states, with the exception of Qatar, are facing increasing gas shortages. Deloitte's 2011 oil and gas reality check report reveals that despite the fact that GCC countries hold about 23% of global gas reserves, they are struggling to meet their growing electricity demands. Immediate shortages are also caused due to the fact that producers are increasingly exporting gas to Asia as Gulf countries sell natural gas and electricity at highly subsidized rates in the local market. The report also revealed that Asian national oil companies are adopting aggressive tactics in pursuing upstream acquisitions. Emirates NBD launched the Gold Certificate today, which allows its customers to invest into the gold market. As the first of its kind product in the GCC, gold can be spot purchased as gold bullion in denomination of 0.5 kilogram and its multiples. Customers can redeem the value of investment as credit to their account or gold bullion at prevailing market rates. Officials say economies of scale will help them offer prices which are 2 to 5% lower than traditional priced options. This is part of the bank's larger strategy to set up its gold business, which includes providing physical gold as well as working capital with the gold and jewellery trade.
UAE contributes to about 20% of the total global demand for gold today, which is across jewelry as well as investment products, which contributes to about 600 tons of gold. Over the past 5 years, whilst the price of gold is increasing, continuing to increase, it's grown by over 150%. There's been a shift from the typical jewelry requirement to investment products. In 1995, only 15% of that demand was in investment products globally. Today, it's grown up to 40% and increasing.
And on the way after the break, we talk to Shakir Rashid, the Chief Executive for Dubai and Oman at Bureau Veritas, about the introduction of energy management systems in the Middle East.